Grains mostly higher on Tuesday. Brian Grete with Pro Farmer joining us. And Brian, the recovery that we saw off an ugly day on Monday, was that mostly corrective buying?
Yeah, absolutely. The funds are heavily weighted to the short side of most of the grain and soy markets right now. We have USDA's barrage reports coming up on Friday, and so everything probably told them that they needed to cover some short positions, and that's what happened. I think that for this to turn into any kind of a major bottom in the markets, we need to get bullish surprises in Friday's report.
Yeah, I was going to say, are we done going down here yet? But it's really all going to be predicated on what we see going into that report. But when you sell off this much, how negative does it have to be to keep prices pressured?
Yeah, it probably needs to be fairly negative, to be honest with you. I mean, they have a lot of negativity already baked in, and I think the big frustration, probably with farmers and some traders right now, is that the Brazilian soybean crop estimate continues to get smaller from private estimates, and yet the market's going down. And probably the reason behind that is that total South American production is expected to be up about 10%. So while Brazil's crop isn't going to be as big as what it was once thought to be, the others are making up for it, and primarily Argentina, because last year, if you remember, Argentina had just a historic drought, and it absolutely halved their crop, and so they are making a big rebound this year, which helps to offset some of the losses in Brazil.
Yeah. So we'll get CONAB numbers out tomorrow, but USDA is likely to slow step South American production, right?
Yeah, and even CONAB, they typically are behind the private estimates, and so they don't make major moves, much like USDA, and so both sets of that data is in all likelihood going to come in above what the private estimates are. If it doesn't, that's a major shock, and that would be something that would help markets put in lows.
Okay. Quarterly stocks. What are you expecting there? That's always a wild card, isn't it?
Absolutely, it is the wild card. So 4 times a year we get that data, and it just the core number in particular is one that analysts have missed as a whole by about several hundreds of millions of bushels on a pretty regular basis, and it provides surprises, and it's just been a hard number for the market to tab, and as a result, you do get those surprises, and it if I had to pick one set of data on Friday that's likely to move the markets in a big way, whether up or down, it would be grain stocks, and in particular corn stocks.
Okay. And what about winter wheat acreage? We'll get that out. Will it be down, and by how much?
Yeah, winter wheat acreage, it's probably going to be down somewhere in the neighborhood of 800,000 acres to 1 million acres, and I think that everybody's kind of anticipating that. There's a potential there, I guess, for some surprises, but that's kind of what the trade is thinking as we head into that report.
Okay. So, Brian, when you look at the collective grain short by the funds, we haven't been this short for a long time, have we?
No, it's probably around 3 years now since we've had this type of net short collectively across the grain and soy markets, and you have to go back to the COVID reaction when we had the big washout and that type of stuff. So the boat is heavily leaned to the bearish side right now. It probably shouldn't take much of a bullish surprise to get some short covering. Now, if there's a major bullish surprise, then you get more active and sustained short covering, and that's when you can put in market bottoms and start to move prices higher.
If we don't get that catalyst in the WASDE on Friday, then what? We start looking at maybe the Brazilian crop estimates. Is that what you're thinking?
Yeah, and I think the on the soybean side of things, the market is pretty comfortable right now in the low 150 million metric ton range for soybean production out of Brazil. The corn, safrinha corn production, it accounts for about 3/4 of their crop, and that won't be planted until after the soybean crop is harvested. Now, Brazilian soybean harvest is around 1% right now, so we still have some time, and I think that's why the corn market in particular has slow played that. We anticipate that safrinha corn acreage will be down and down potentially sharply, but they have some time, and so as we move through January into February timeframe, then that'll become a greater focus, I think, from a market perspective.
Yeah. We've been talking all fundamentals, but let's talk a little bit of the technical picture. New contract lows in corn here, new lows for the move this week in both soybeans and in the wheat market. Are we done going down from a technical standpoint? Did we hold where we needed to hold?
Well, 450 corn in the front month contract, that's a critical level, and if you break that, then you could probably chunk down to that 425, 420 level that would be your next landing spot, and so I haven't seen enough yet to tell me from a technical perspective that lows are in place, and the same holds true for soybeans and wheat for that matter. Just we haven't seen those types of technical signals that would indicate that lows are in place.
Okay. Cattle market. We ended mostly higher today, except for nearby feeders. Live cattle futures, were we putting a little weather premium into that market?
Yeah, I think so. In all likelihood, that's typically what happens when we see these major weather events like we're seeing in the central U.S. right now. The market gets bullish initially and factors in the stress and the weather impact on cattle near term. And then as we move forward over the next couple days or even weeks, and they realize that supplies are backed up, it becomes less supportive. And so we're going to need that cash market to provide us some support as we move forward. Now, we've seen 3 consecutive weeks of gains in the cash market. We're anticipating this will be the 4th week. We typically, from a historical standpoint, the first quarter is relatively strong. And so I think that the cattle market has forged a low. I'm actually somewhat encouraged by the slow grind higher instead of just shooting to the upside. I think this is more sustained from a longer term perspective.
You bet. And the boxes, have they bottomed, do you think, here? We had that steep slide the last couple of weeks.
Yeah, I think the choice is cutout is showing us that it has bottomed, and I sure hope so because it was absolute collapse there to finish up 2023 and start the new year. So prices probably got too cheap, but the ribs were a major component of that, and they just absolutely collapsed.
Yeah, I think down like almost $100 in about 7 sessions. Hog market, 4th day up here. What do you think? Is the seasonal low finally in?
Well, I think so. The cash market is starting to show us some signs that it has put in a low. It'll be 3 out of the last 5 days. Tomorrow's index being higher, and so there are some hints there of that. From a technical perspective, maybe the February futures are getting a little bit out in front there. Good technical action, building a premium to the cash index. We just have to have the cash market catch up right now, and weather comes into play too. Much like cattle, the weather was factored into the market, and we'll have to see how it impacts slaughter runs and movement as we move over the next couple days into next week.
Yeah. Slaughter today only 395,000 head. Are you concerned we could back up hogs?
Well, I think from what I'm hearing is that we'll probably run some pretty good sized Saturday kills to make up for some of these days early this week where the slaughter supplies will be down. But we are backing up some. It's just a matter of how many, and that's why it'll take into next week or maybe even the following week to figure all that out.
All right. Thanks for joining us, Brian Grete with Pro Farmer. That is Markets Now.